Welcome back then. The Nifty is holding with a gain of around 20 points or thereabouts, but keep an eye out on the broader markets. Interglobe Aviation, that stock suddenly has taken off. You pull up the intraday chart, it's moved to the high point of the day. And Jet Airways as well had moved lower, but that's, cut some of its losses now as we speak. So keep an eye out on a couple of these stocks. But earnings season is upon us, and Sonia is with us to run us through what we can expect from the auto space. Sonia, over to you.
Well, thanks a lot for that. It is expected to be a subdued quarter for the auto sector this time around. The margins are expected to take a hit. Demand has slowed down because of a whole host of reasons, whether it's, the higher insurance costs, the higher interest rates, or even the NBFC liquidity. In fact, for the OEMs in general, there is a single-digit volume growth that's expected. Just to drill it down to specific stocks, the market leader in the passenger vehicle space, Maruti, has had a subdued quarter this time around. The volumes have declined by 0.6% year-on-year and 11.5% on a quarter-on-quarter basis. In fact, Motilal Oswal expects Maruti's margins to contract 270 basis points year-on-year because of higher discounts that they had to offer to clear their inventory. Tata Motors also had a weak quarter. JLR continues to disappoint because of the big weakness in China. In fact, JLR volumes are down 8.5% year-on-year because of slow demand and deferment of purchases in China. Hero MotoCorp reported about a 5.5% year-on-year volume growth, so it continues to be in low single digit. And over there as well, brokerages like Motilal Oswal expect Hero MotoCorp's margins to shrink by 160 basis points. The outlier in the pack could be TVS Motor. It had a very strong quarter, 20% volume growth. Some of the new launches have done pretty well. And that's why if you look at the valuation parameters, I just want to spend some time on valuations. TVS Motor is the most expensive stock in the two-wheeler space. It's currently trading at, much more than Bajaj and Hero. TVS trading at 25 times, while Bajaj and Hero trading at about 14 to 15 odd times. And the reasons for that, of course, is TVS's new launches have done very well. The new scooter Ntorq, the Apache, etc. have done well. And the volume growth is much better than peers. In this quarter, for example, TVS's volume growth is 20%, while Hero MotoCorp, as I said, is just 5.5%. The other companies like Maruti and M&M can't be compared because each have their own specific businesses. But let's do a historic comparison. Maruti, for example, trades currently at 22 times. And for the last 12 years, Maruti's core earnings have been trading at a forward PE of around 21 times. So currently, Maruti, despite all the volatility, is not cheap. It is at par with its historic valuations. Similar is the case for M&M. Currently, M&M is trading at about 15.5 times forward, and its 10-year average has been about 14 to 15 times. So M&M is also trading at par. You see, we can't compare M&M to Escorts because M&M has a auto business as well. But all in all, you'd have to say that this is going to be a weak quarter for the auto sector.
Okay, thank you very much for that. In fact, let's pose all these questions to Jay Kale of Elara Capital. Jay, thanks so much for joining in. So clearly, it's no secret that Q3 has seen volume declines and margin compression. Can you break down the performance across the various segments? And if you could share your own estimates.
Demand has been weak across the board, especially in the festive, which has resulted in an inventory correction for most OEMs in December, which has led to lower volumes compared to what we would have expected. Further, because the festive was weak, the discounting was also on the higher side. So across the board, we would expect a margin compression. Maruti, for example, we are expecting close to 20% on EBITDA decline. CVs, of course, the volumes have also been weaker, maybe flattish to negative in the third quarter, where discounting is also expected to be higher. So over there also we are expecting margin compression. In two-wheelers, it will be, you would have TVS and Bajaj maybe posting growth because TVS has gained market share in the motorcycle as well as in the scooter segment specifically, and in the premium motorcycles, whereas Bajaj on a low base has gained market share. So in two-wheelers, it will be a mix of EBITDA growth and EBITDA decline, but in passenger vehicles and CVs, expecting an EBITDA decline.
Okay, Jay, I get that point. So quarter three is muted, but would you say any kind of recovery is underway, or do you expect demand pressure to continue for some more quarters?
There have been initial signs of demand uptake. In December, for example, for passenger vehicles, we did see close to a double-digit retail growth. But that has been led by higher discounts, and traditionally December is a high discount month. So I would not say that the recovery is fully back here, but at least we will see another at least 3-4 months for a decent enough sustainable recovery coming back. Of course, elections will play their role in how things pan out, but the recent fall in crude prices should aid sentiment going forward, which was one of the main reasons why festive was not good, because at that time fuel prices had shot up quite substantially. So now with fuel prices correcting, I think the sentiment should turn positive, although slowly and gradually.
Okay. How would this fare compared to the valuations? The stocks have corrected meaningfully. Do you see further downside if the results disappoint, or do you think the worst is possibly priced in?
If you see currently what we were expecting in FY19 and what maybe pan out, we might see earnings downgrades for most of the companies. To that extent, you could see some pressure on the stocks. But if you have to take a 2 to 3 year view, we expect the passenger vehicle industry to bounce back in FY20 and 21 for the factors that I just mentioned. So one has to take a call of the stories that you like, the companies which are strong in terms of execution capabilities, possibilities of market share gains, and you'd rather bet on them and then take the short-term pain and then kind of play for the long term. So from that perspective, we clearly like Maruti, where there will be short-term pain, but you would definitely see it being the key beneficiary if and when the demand bounces back.
Well, you talked a lot about downgrades. A lot of these stocks like Aicha, etc., they've already seen sizable cuts. Which stock do you think is at the risk of maximum downgrades?
Downgrades will happen across the board. Some of it have happened, some of it will follow post results and post the volume numbers. Definitely people were expecting quite high growth for FY19, and clearly the retail sentiment has not been that great. Further discountings have been high. Almost all stocks will see near-term earnings downgrades. The quantum could vary depending on how companies are able to better manage their costs at their end. But if I have to talk of FY19, I think most companies will see earnings downgrades.
Okay, and finally, Jay, what would be the pecking order in the sector?
My pecking order would be Maruti, TVS, Hero and Ashok Leyland in OEMs, and ANGs would be Exide, MRF, Apollo.
Okay, thank you very much, Jeff, for joining in. Slip into a break on that note. On the other side, we'll get chatting about the market technicals with Ashwini Gujral and Sandeep Walkley. Stay tuned.